$10,500 US. That is how much I have so far made from trading in these first 2 months of 2024. And actually, to be precise, I have made more than $12,000 US. So let's scroll down here. You can see, guys, this is how much I've sold back to the market. As you can see, this is, as you can see, total balance. So the last transaction that came in, I withdrew $245 from my account, as you can see, guys. So how much I've so far sold is $13,605 US, selling back to the market so that I can receive profits. As you can see, guys, this is how much I've received in these first 2 months of 2024. And in this video, I'm going to be showing you the same exact way, guys, I've been doing. This is my crypto statement, as you can see, with EURUSD. That is the platform that I use to receive money. I always receive money through EURUSD from prop farms and also my FXV account. So guys, if you're new around here, please make sure to subscribe. I'm going to be showing you the same exact way I've been trading in these 2 months of 2024 to be able to make that insane amount. That is a lot of money, guys. That is more than 40 million Ghana shillings. If you're new around here, please make sure to subscribe and let's get started with this video. I'm actually even running profits right now. Let me even show you. I'm running profits off a trade that I called on EURUSD, and that is the same one I'm going to teach you. So this is my trade right here on EURUSD, guys. So you can see this is my EURUSD trade. As you can see, I'm running profits on my account. This is an FXV account, as you can see, guys, running profits. So anytime when you're trading in the forex market, make sure to come to your daily time frame, guys. We're doing price action. Make sure to come to your daily time frame, and I'm going to be teaching you the same trade that I caught on EURUSD. I called a sell trade. Like traders, when you look at this chart, price is always going up and down, up and down. The only time when price ranges in the same exact zone, it means price is consolidating. Now, for me, I always want to eat off when price is going up and down. So what I always do is I always come to my daily time frame and mark out the highest point, of the previous candle and the lowest point of the highest and lowest point of the previous candle. So the lowest point being the support and then the highest point being the resistance, like that, traders. So as you can see, so I've marked out the previous candle, which is this one right here. Now after that, I zoom into the 4-hour candle. Now this is what I'm going to be looking at, the bigger picture. Traders, this is the lowest point price touched yesterday, and this was the highest point price touched yesterday. Now what happens? We had price open up, starting to push back to the upper side. What price did, as you can see, price starts pushing up to the upper side. 1, 2, 3 candles, and it reaches the blue line again. And remember, traders, the blue line is our resistance line. But you can see price touches it, then pushes back down, and then after approaches that zone again 2 times. As you can see, so the first candle, it tries and break out, and the red candle comes back and closes from inside, guys. This is the only way, traders, you can make money from the forex market. Mark out the high and low of the previous candle. Wait until price approaches any of those zones. Watch it how it approaches these zones. Now for me, price approached and it gave me a fake out. Most of you guys, you should know by now, I love to trade fake outs. Fake outs happen anytime when price approaches a support or resistance zone, you can see. So how does a fake out look like? We have always a green candle that breaks out, and then we have a red candle that comes back and closes from inside, meaning price was never outside. You see, traders, now we're always going to have the next candle, this one right here, to try and retest, as you can see. So it tried pushing back up there, but again it just fell to break that part right here, and it started coming back down. And yes, those are the same profits you're seeing me taking right now, traders. As you can see, guys, I'm in blues, traders, blues. And it's actually 12:53 right now AM. Everyone is asleep. I'm making this YouTube video, guys. So as you can see, so let me show you my confirmations. Obviously you can see the fake out. So for me to confirm my trades, guys, I was in the smaller time frame. So this is what I was looking out for, guys. So we had price give us this first fake out, and then after price pushed back into to retest. But in this way, price gave us a double top. You can see, guys, a double top. You can see. So I always love to take my trades after price breaks the neckline of the double top. So this is, let's say this is my neckline, but not just a neckline, but also you can see it's also a support zone. You can see, meaning price wanted to break this zone right here, and and break it and go to the downside. As you can see, guys, that was the trade that I was looking out for. And remember, guys, price had rejected the upper line. The upper line is our resistance from yesterday. As you can see, price comes back inside, meaning it's going to be approaching the lower part. So I took my trade exactly right, like these traders. And actually, I have to be closing my profits. I have to be closing my profits because my target was just like this. I didn't set my stake profit, so my target was just like this, as you can see, putting my stop loss just there, and then putting my target exactly around this part right here, as you can see. So I didn't put my take profits. I'm going to be closing my profits manually. I wanted to make this video so that I can show you guys how I took this nice trade, as you can see. Now, one thing you need to understand, traders, the best trades happen after the masses have been taken out. And yes, who are the masses? You can see all this was take out the masses, and all this happened at this zone right here, which was a resistance zone, as you can see. So the masses were taken out, and after the good trade happened, as you can see, guys, as easy as possible. I can understand this. I can trade it. Let me show you another trade that I caught. It was the gold trade. Now, when you look at gold, guys, price is now pushing in an upward way. Now, for EURUSD, we had more of red candles, but now here we have green candles. So you can see. So what I always love to do, as usual, guys, I mark out the previous low being the support level, and then the previous high being the resistance. Now, after that, we zoom into the 4-hour candle and then see what is price really giving us. Traders, when you look closely, price started off by, pushing to the downside. Why did price really push down to the downside when it opened first? Obviously, because we had this zone right here. This is called the demand zone, obviously, traders. So you can see when price opened up, this was the lowest point from yesterday, and this was the highest point from yesterday. So when price pushed up to this level right here, it rejected this level and started coming back down, as you can see, guys. Now, for you to see that this is really a demand zone, let me show you on the 1-hour candle. Most of you guys don't know what a demand zone is. So a demand zone is any zone that causes a push to the upper side. You can see this push to the upper side. You can see we have 1, 2, 3 big candles. You can see we have 1, 2, 3 big candles, as you can see. So meaning price will definitely come back to this zone after a period of time, as you can see, guys. Or what you can even say, this is more of a retracement, because remember, anytime when this happens, price it's more of retraces. So you can say from here. We can say from here to here, this is 100%, meaning price, how far will price retrace before going back to the upper side? You can see, but not just aiming for this part right here. This was expected. Price was expected to break the upper part. This is why when you come back onto your traders, when you come back onto your daily time frame and you look closely, there is this zone right here, this big candle right here. This was my main point of interest, right? This one right here. So when we mark out the high and low of that candle, let's say we mark it out just like this. You see, traders, and we pull this, you can see that price was some exact zone, meaning price had been ranging in that zone for quite a period of time, as you can see, and it was just waiting to break out, as you can see, guys. But now for us, we wanted to really day trade. We want to take a trade, we want to day trade. That's why I told you mark out the high and the low of these candles, you can see. So when price pushes up to the upper side like this, it's always going to come back down. It always comes back down to zones like supply or demand zones, as you can see, guys. Or we can even call just this a retracement. So meaning if I'm to apply my Fibonacci from this part right here to the upper part right to that, you can see, guys, price closed above the 0.6 level, which is this one right here. You see, traders, literally this is price action. You see, now price pushes back to the upper side. Now, as I mentioned, good trades happen after the masses have been taken out. So price was just coming down here to this demand zone, as you can see, after it went back up to take out people's stop losses, as you can see. As everyone thought price was going to break out from here, it came back down, take out people's stop losses, and then shoot back to the upper side, as you can see, guys. This was another trade on gold. You can see, traders, you only trade things that you can understand. This is how the 1-hour candle looks like, as you can see, guys. Price pushes up to the upper side. This was the lowest point, highest point. Price, you guys can see. So price starts off by dropping down to this zone right here, then pushes back to the upper part right here. Then after it comes down, you can even, when you look closely, traders, you will see that you even have more fair value gap in here. Now this is even to make things more sweeter. Fair value gap is liquidity. When liquidity is taken out, price will go wherever it wants. This is something that happened. You can see, guys, we had even a V-shaped, meaning that smart money is in play. You see, traders, now here, take your trade after seeing the components. So the first components we have a spinning top, a red one, indicates that yes, sellers are out of play, buyers are coming into play. We have a doji candle, this one right here, telling us that yes, sellers are done, buyers are coming in play. This is the confirmation I'm telling you about, guys. You can see. So whatever you do, take your trade. Take your trade, guys. Make sure to put your stop loss, as you can see, targeting that level right there, putting your stop loss just like this, as you can see, guys. So the reason why I recommend this type of trading is because it enables me to have low risk entry points in the market. That is how I have been able to make more than $10,000 US from the market. So anytime when I'm trading, I'm always looking out for the low risk trades. I don't go in for high risk entry points. I look out for always low risk entry points. If you have enjoyed this video, guys, make sure to subscribe. I'm going to be explaining this same concept in another video, deep so that you guys can understand it. But today I just want to tell you, keep your trading simple as possible. Anything that you can't interpret, don't trade it. This has been day trading, guys. I'll see you in my next. Peace.